Hello and welcome to the show at a time when debt is a big concern for most of the companies and liquidity crunch is what the banks are facing. At a time like this, how easy is deal making in the country and what can the budget 2016 do about it? I have an eminent panel with me. Joining me are Mr. Cyril Shroff, Mr. Sushil Agarwal as well as Mr. Amit Chandra to give us a 360-degree view on where Deal Street is headed and what can the government do to bring in ease of doing business. My first question is the corporate view that is very much required from Aditya Birla Group. Mr. Agarwal, you have been part of so many M&A transactions. In fact, some of the debt-laden companies have been rescued by Ultratech as well, and some of the other companies may also be looking at it. How easy is deal making at this time, and what are you expecting from Finance Minister Arun Jaitley?
Let me, and today I think, if we compare the FY14 vis-a-vis FY15, the number of transaction actually has gone up. So just to put in numbers, I think around 550 was FY14, which has gone up to 600. So number of deals have increased. But from a value point of view, obviously, there has been some slowdown in the numbers. So against 37 billion US dollar, FY15 has seen around 30 billion transaction. And then there are transactions more concentrated towards, say, IT, pharma, health, or even lots of on softer industries. But the point which you are making, where the high debt and have we seen a lot of transaction? I think answer is relatively no. And there are issues around. If I want to pick up one specific one is like MMRD. So there are lots of stuff which possibly on a sectors like cement to mining side, metal side, which can happen, but which are positive, which are at this point of time is not really happening because there is no clarity on that aspect.
Mr. Shroff, from the legal side, what do you think is expected from the budget this time around, and where can they really make a difference when it comes to these deals, and especially debt-laden deals?
So the budget is actually not just a tax proposal. It is actually a much broader financial statement which is used by the government to do a lot of signaling in terms of what the message for the next financial year is. It's also an occasion when a lot of other policy statements get announced simultaneously, and one part of it I think is tax. So I think again, trying to sort of speculate of what could be in the mind of the government at this point, I think the first thing that they need is signaling in terms of just carrying forward the message that India is truly open for business. I think there is a unique opportunity that India has just now in the next couple of years because of the windfall from the import saving and the oil import bill, which has now allowed them to sort of manage at least somewhat the fiscal position. So in this time, I think India has a unique opportunity, being a bright spot in the world, to really take advantage of this moment. So that's what I'm expecting a strong signal. This is actually the last opportunity that we have at this point.
Last opportunity for this government, but last budget, they clarified on the whole tax issue. And we all thought unanimously that the tax issues are behind us and foreign investors would react positively. But Vodafone case and the tax case is back to haunt us. Mr. Chandra, come in on this. How sensitive is the foreign investor community to this particular bit, and what will be the impact of this issue again cropping up?
Nisha, I think for foreign investors, lack of predictability is always a big issue. I think they are fine taking business risks, but policy risks is something which catches them by deep surprise. And in a world where capital can freely to a lot of places, when you layer that on, it makes a market far less attractive. So I would definitely say that, to Cyril's point, that I would love to see a budget where there is simplification on the tax side instead of complexity. There is continuity, i.e. stability, even if there isn't big bang improvements. I think anything that's retrospective, retrograde, would, I think, really spook people off at this point of time. And I think as long as, no one's asking for SOPs, in my view. And this is probably not the time for SOPs. I think as long as we don't have negatives the absence of negatives in itself will be a great positive. And I think foreign investors will be fine with that.
And what about the put call option? That has also held up quite a few deals.
Yeah, I think the put call option has held up. But honestly, I feel it's a minor irritant. I think more is made out of it than should be. There are some specific cases where it's become a issue and some high profile ones. But if you ask me if there's a resolution on the put call issue, do we think that capital flows to the market will suddenly spike up? I don't think that's the case.
Okay. So, Mr. Agarwal, at this point, how do you see the investor community really reacting to you? Of course, there was a point when you were engaged in your retail business and there was a stake sale which could have been really implemented, but you decided against that, went in for a merger. So, lots of activity really taking place. But what has been your conclusion with that interface with foreign investors and when it comes to them engaging with Indian corporate houses?
So I think that particular issue may not be relevant, but I think I'll go along with what Amit was making a point. I think generally the foreign investor would be keen to have a predictability of where they are coming. So I think once they can make it a point that over a period of time this is what they can make out of this country, that's what they love it. And I think all the time we kind of say this point that. If government can give this confidence, I think they would have done really good service to the foreign investor. And I think it is true even for domestic investors as well. People like us who keep making investment all the time. And if I pick up a number, in last 2 decades, we would have done a total investment of $33 billion out of which maybe 11 billion has come through various deals which we merger and acquisition, but large piece of capex which has happened. I think the point is if there is a predictability around when you make that investment, that makes the life simple.
Of course, some of the unpredictability and uncertainties have cropped up after the deal was signed in the case of the cement deal, and you did mention the MMDR Act, which could be addressed by the budget. You're hopeful about that?
I think so. I don't know whether budget is the place where some of these things should be captured, but the point is some of these issues are kind of dealt upfront. Because there are lots of deal, and the 30 billion deal value which I was talking about, there were lots of deal which has not got concluded yet, and some of these points are live.
So, Mr. Shroff, where is the government really lacking in that, bringing in that confidence?
I think it's also a question of a coordinated approach between various agencies. So you have different arms of the government talking in different voices. Some are talking in a sort of very narrow perspective. I mean, to take the same example of the MMRD issue, I think it runs contrary to the broader philosophy of let's make deal making easier. And this kind of issue can really stump any deal. So I think in terms of a more coordinated approach to the entire regulatory process, sometimes it may be the CCI issue, sometimes it can be a SEBI issue. So there's always some stumbling block on a major transaction, and there is not a coordinated way in which the system as a whole can clear these issues and make deal making easier. This is, I think, one of the biggest problems.
I just want to kind of support, Cyril, what you're saying. There is a specific live situation. Government have allowed increased limit in life insurance sector, and from 26 to 49%. And the foreign partners are willing to put in money into the country, but we have to go through various regulatory bodies. Can you have a single window clearance of issues like this? Now we have to go to IRDA in one place, then you have to go to FIPB, then you have to go to CCI. All of those various arms, they might ask similar kind of question, but can you really provide a ease of doing business by having a single window clearance? So
it actually reminds me of driving a car with your handbrakes on, something like that. That's basically how I see the policy just now.
The Lafarge Holcim deal and
so many. I don't want to
CCI
get into specific examples.
But these kind of situations really throw up that one concern that regulatory hurdles are way too many at this point.
Yes, right? And lack of coordination.
And lack of coordination.
And I'm not saying that each of the issues is not valid on merits. I mean, there's always some angle and some reason why some of these issues are raised. But there has to be some way of quickly fixing them. Because otherwise, what you give with one hand, you're taking away from the other.
So, regulatory hurdles are there, Mr. Chandra, but obviously they are also required for prudent business, for integrity and checks and balances. What is it that India is lacking, which other countries, Western world, has fixed really, and which can really be brought in?
I think the government is seized with the ease of doing business issue. And clearly our ranking shows that, most of the rest of the world, at least people who we look up to, have fixed that. I think it's a relative ranking. And the fact that we are where we are, to the credit of the government, we moved up, 7 notches. But I think we are still at least 20, 25 notches short of where we should aspire to be in the next 2 or 3 years. So if you ask me, I think the government knows. I think the issue is that we are a complicated country in terms of how we govern ourselves, and that governance is deeply rooted over a long period of time, and it takes time to therefore change some of these things. Cyril rightly pointed out that people need to, even in the government, need to collaborate and talk to each other because often what one hand giveth, the other taketh, and that's causing a big problem. I think all of that takes time to change, but very clearly that's the biggest area I think that we need to focus on, which is ease of doing business. And if there's another area, it is part of ease of doing business, which is tax compliance and tax stability, because even instability in taxes is a big problem when it comes to ease of doing business. So not just compliance, which is lesser number of taxes, even if you collect the same amount, collecting it in a simple, transparent way is very important.
Yes.
But I think just having a predictable framework, so when you enter and when you exit, that broadly you don't have one new thing which has cropped up, I think is very, very valuable.
Talk of capital gains tax and increasing that number of years. How much of inflows would be affected because of that?
I think, so I may have a very unpopular view on this. I believe that we should have a capital gains tax, okay? And I think I'm maybe a small minority of capital market participants who believe that. But I think we should have a small, reasonable, equitable tax across all participants in the market. However, I think what's very, very important is that you have to be thoughtful about when you introduce this tax. You do not, put a 1-ton weight on a camel's back when the camel has weak knees. Okay, I think given everything that's happening in the world at this point of time, I personally feel that it will be the wrong time to introduce it. But I think at some point of time we should do it. When we do it, it should not be retrograde, because again, people who have entered with the assumption that they will not have an exit tax should not have to, suddenly pay one out. So it should be, forward looking. But as I said, I think there'll be a time to do it, and that time is not now. Let's not forget one thing. If you look at the finances of the government, the predicted finances that, hopefully there won't be any surprises on, tax revenues have actually been reasonably robust thanks to indirect tax, the surge in indirect tax.
I think the political class has brought into the sort of vision and the reform story. But I think large parts of the bureaucracy have not actually internalized what is required for making this happen. So I think they may be saying the right things, but they're not walking the talk in terms of, and truly understanding that for getting an economy and a country like as complicated as India to move ahead, the kind of passion and the speed of decision making that is required, and some of the risks that have to be taken in terms of giving the decisions, bona fide risks, that nobody is prepared to take. So I think that is where there is the biggest disconnect, where the political class has moved along, but the bureaucratic class is not willing to take any risks, even though they may generally sort of at a philosophical level buy in the story, but in their day-to-day life, they have not moved the needle in terms of what is required.
Given the deep pockets that Aditya Birla Group has, do you think there is merit in more acquisitions in the debt-laden sector?
So as a group, we are focused. We have a vision to remain in the top 2-3 players wherever we operate. I think clearly, if there are value accretive transactions, we will always look for those deals. Subject to that, it could be kind of consummated.
Yep.
And we made few points that there are structural issues which kind of held up some of those transactions. But given our vision, I think we would be clearly kind of looking for a value accretive deals for sure.
Mr. Chandra, what I see is that a lot of companies are saddled with high debt. So the strategic buyouts are looking very difficult. Do you think funds are going to really play a very important role in bringing out most of these companies from this debt situation?
Yeah, Disha, I think private capital can definitely play a very important role in this situation, because the fact is that despite everything that's happening on the ground, private capital has both a lot of firepower, particularly available for India. So there's clear desire and there's capability at this point of time. I think the challenge that you have in many of the situations is that these are not things that essentially private investors can themselves help resolve. It requires a strong domestic partner who has the ability of being able to work with the complexities that our market faces, and you really need to back someone like them to go out and resolve these situations. So in my mind, actually, while there is definitely distress in many segments of corporate India, I think what you will probably see is a lot more partnerships where people who want to look at this as an opportunity, who have desire, will be backed by private capital to go out and resolve these situations. There will also be situations where there are high quality promoters who find themselves distressed because of extraneous factors as opposed to their own capability. And I think where people will identify those kind of promoters, I think they will bring in capital as well. But for that, you need the banks to basically take a fair write-off, because these won't be viable enterprises unless you basically reset the balance sheet. That's a tried and tested route globally. I think in India we are only beginning to hear about it, and the Reserve Bank of India, the governor, is basically laying the roadmap out and encouraging banks to do that. So I do think that one of the big themes for private capital deployment in India in the next 2 years will actually be distress situations. And helping resolve distress situations.
How complicated are these transactions, Mr. Shroff? And do you think, of course, I have seen in most cases where equity value has eroded, but the debt remains the same and banks want to really take back the same amount of debt that they had lent. Of course, that can't happen. Haircuts have to really come in. Is bankruptcy code and its passage the only solution available?
It is one of the solutions. So the short answer to your question is how complex? Answer is very. And whether it's under the bankruptcy code, which has yet to be tested, or under the current systems, and there's so many options available, CDR, SLR, SDR, all of those options are available. But I think it will always remain complicated. The good thing about the current environment is that there is a strong political will to resolve this situation, both at the central level, at the RBI and various banks. So a lot of the M&A that we're seeing now has some stressed situation on the sell side. It is probably driving 90% of deal activity in India. By whatever name, it can be packaged in a number of different ways, but at the heart of it, it is some stress situation that is driving deal activity.
Of course, and Mr. Agarwal will vouch for it. Of course, the recent Idea Cellular's deal also in the telecom space was driven a little bit because of that. But according to you, is telecom space looking most attractive as far as Deal Street is concerned?
There are many actually. So telecom could be one, cement could be another. So all the infrastructure sectors could be attractive enough. And Amit and Cyril both are making point of distress asset, high debt on the balance sheet.
Are you acquisitive in nature at this point?
So as I said, to kind of maintain our leadership and kind of look for a value creative proposition, the answer is yes. So you should not be getting a deal just for the sake of doing a deal. It has to be value creative for all the shareholders concerned. So I think the answer is yes, but on a relative term.
If you can handle complexity, this is the best time to buy.
Absolutely.
So ease of deal making is one. The second one, the mantra for the government has been Make in India drive. Do you think the foreign investors, especially private equity players, have really been convinced about this particular drive? Because money still flows largely in IT, healthcare and other safe haven, probably startups.
I think one thing that we should be very cognizant of is that we have become very, very parochial in nature. We expect immediate results from any announcement. I mean, when you think about project planning, what it takes to set up a large industry, it's a long process. You spend a year or so on the drawing board, then you start acquiring land, you start building out. It takes 3, 4, 5 years. My prediction would be that the Make in India campaign will be adequately judged 5 or 10 years from now, and not in the next 5 years. And next 5 years, everyone will feel that it fell short, but I'm convinced that 5 or 10 years from now, everyone will feel that it was absolutely the right thing to do.
Okay.
And I personally feel in some of the areas we are already beginning to at least see the some visible movement. For example, I think in defense and in electronics, these are two areas where you're beginning to see early signs of action. In both those areas, in 2 or 3 years, I think you could actually see results. And that will be a good lead indicator. But otherwise, generally, step back and think about the economic environment we are in. We have low capacity utilization globally and in India across a lot of sectors. We have high stress across the corporate world. All of that tells you that the road for the next 2, 3, 4 years has got to be resolution of stalled assets and purchase of distressed companies before you start spending money on actual capex to benefit from growth beyond that.
Slight pickup in stalled projects has taken place, but of course we are not out of the woods.
We are not out of the woods, and that's a big opportunity. If you just look at the size of the stalled projects, and Cyril may know the numbers, it's like $400-500 billion is what people talk about. When you have $400-500 billion earning negative returns, because essentially it's levered, so there's nothing really coming out of it except interest time bomb that is ticking. If you look at that and load it onto GDP, it's a big drag. Just resolving all of that could have a 1-2% pickup on GDP. So I think there must be massive focus on that. Just getting that right alone will result in economic growth. Of course, it will help the banking system more than any capital injection, in my view, is going to help the banking system.
All right, fair point. And Mr. Shroff, I wanted to understand, where are you seeing most amount of activity, and vis-a-vis last 2-3 years, how is this year really poised for the deal street?
So I think looking forward in terms of how I see the rest of 2016, I think I would see a lot of stressed asset related M&A. For whatever reason, it may not be a bankruptcy code transaction, but that would be, the driver would be some kind of stress situation. So I'm forecasting a lot of M&A activity for the rest of the year, driven primarily by this across sectors, but infrastructure will be probably the biggest sector, including power and roads, the whole works.
And Aditya Birla Group will be one of the big proponents of that as well?
Always.
As I said, yes, there has to be a value creative proposition, but clearly to kind of keep our leadership position and some of those stuff, I think we'll be looking for an opportunity to acquire meaningful assets.
It's about value finally.
Absolutely.
And of course, market volatility is a bit of a problem when it comes to valuations, Mr. Chandra. So how, in this environment, how active is Bain Capital expected to be?
Well, I think in general, we've been extremely active. In the last 3-4 months alone, we've closed 2 deals, Larsen & Toubro Financial Services and Quest Engineering. Quest has got something to do with India, L&T is pure India. So I think we are extremely active. We think this is a great time to invest. I can't think in the last 10 years of a better time to invest in India than today. I think the biggest challenge actually we face is valuations. I think people aren't necessarily translating the economic environment into reality. And so if you look at on a relative basis, India actually is holding up really well. The Indian market is broadly within 1 click of its long-term trading average. You go to China, Indonesia, Taiwan, Russia, Brazil, it's between 20 and 50% below its long-term trading average. So you're seeing on a relative basis, you're seeing a lot of opportunity. But I think from a macroeconomic perspective, this is the best time to actually invest in the country.
All right, on that positive note, thanks so much, gentlemen, for joining in today. And so those were the important perspectives really coming in from our special panel. Of course, all eyes would be on Finance Minister's budget, but ease of deal making is what the deal street is looking at. Thanks so much for tuning in.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.